welcome back to Hedgtrade. This is Ronnie. I'm going to go ahead and provide a quick market update using the Hedgtrade platform. So Hedgtrade is an AI-powered market intelligence, quant research, and cycles navigator. We have all kinds of risk models, including seasonality, cyclical projection, market sentiment, and many other models. So it is really a tool to help you gauge the markets, have a statistical bias so that you can build the sum of the evidence and become a better trader. So if you look at the S&P 500 as a starting point, so it's been going sideways to down, which is not a surprise. That's what we talked about in the last video. Um, but it looks like the short or the bears, the days are counted for the bears. It's probably going to go down into the middle of March before we're going to have a counter trend rally going up. But let's not be mistaken. This is a bearish environment. We may have, for the Elliott wave traders out there, this could be the wave 5 capitulation before we get a counter trend rally. But I'm saying that we're not out of the woods because the longer term projection, the regression model here is really showing us that we're entering a bear market, right? Literally a bear market going into next year before we have another rally going up, probably not hitting a new high on the S&P 500, but it's definitely going to go sideways, big sideways movements going to the next couple of years. And if I go back to the daily projection, so the green line is the actual, this is where we are as of today. And the projection going to the middle of March is also consistent with seasonality. This is the day of month seasonality, which shows a bottom for the S&P 500 going to the middle of March before we get our counter trend rally. So I really like consistencies different among different risk models. So we have seasonality, we've got the cyclical projection, we've got the regression analysis. If I look at the, yeah, so going up and I look at the intraday for the time being. I'm going left and right, but this is just really to show you guys a broad sentiment, a broad direction of the S&P 500, probably going down into trading session today. Today's Friday. So don't short this market too hard. That's the message. Maybe prepare mentally for a long position going to mid-March. Get a tight stop loss, and the same probably applies to the NASDAQ. That's why you've got all your different asset classes with Hedgtrade supporting thousands of instruments. Looking at the NASDAQ, you're going to have a similar projection. So the four indices, the NASDAQ, the S&P, the Russell, the Dow Jones, they all correlate, but obviously have different levels of volatility. Um, and um, and this is what we're going to look at now. Going to the NASDAQ. So the NASDAQ obviously is a short. It's been going down. We've got different levels of support, trading strategy for today. But this is a short video, so it looks like the NASDAQ is probably weaker. We might have a bit of a stronger capitulation, maybe a double bottom going into the middle of March before a counter trend rally. So just like the S&P 500, but obviously a different level of volatility. There you go. This is probably a down swing for the day traders here going to Friday's trading session. Seasonality should be similar to the S&P 500, obviously, and our longer term projection is probably not as weak as the S&P 500, but definitely a bear market, probably not that aggressive, but definitely a move down going to 2026 before resuming higher. But obviously, these models are updated in real time. No one knows the future, and this model definitely does not pretend to know the future. Everything is always in movement. It's all about the statistical bias, building the sum of the evidence for what's really in front of us. So what's in front of us for now is a swing down, a bearish sentiment going to the middle of March. I also want to take your attention to the Russell. The Russell is definitely the weakest. And why am I saying it's the weakest? It's the weakest because the sentiment, so the retail sentiment here is very bullish. You can see here that 68% of all retail traders are on the long side of the Russell. So this is a contradictory indicator, meaning that there's probably a bit more weakness, which is probably not shown here in the daily time frame. But um, but looking at seasonality again, yeah, so the seasonality, just like the S&P, just like the NASDAQ, is showing us a downswing going to the middle of March, which may be supported or not by the cyclical regression. But don't be mistaken, the retail sentiment is very bullish, which is again a contradictor. And the monthly here projection is definitely the weakest of all, with a pretty massive downside move going to into 2026. So if you want to short the Russell and be long on the S&P, be long on the Nasdaq, and have this kind of market neutral position going to next year, make money on both sides, this could be one of the thoughts, one of the ideas that we have as part of that video. So I want to look at the USD Japanese yen as well quickly, see where we're at with the USD JPY. Going to FX, looking at the USD JPY. So this is a short. It's been going down. The harmonics are showing us, yeah, just like the US indices, also going to the middle of March, going down to the middle of March before having a counter trend rally into April, middle to the end of April. Seasonality wise, there's probably a lot of indecision here, sideways, before resuming higher without counter trend that I just mentioned. Um, yeah, and the regression analysis showing us as well some interesting movements there. So I want to keep it short, and this is what I'm going to do with this video. I'm going to finish it with the VIX. Let's look at the volatility index. So we're long. It's been going long. This is what the last video mentioned as well. So probably, yeah, upward movement here with some consolidation going to the next couple of weeks. Seasonality is showing a top going to the middle of March, which again correlates with the US indices having a bottom going to the middle of March, which again here provides correlation. I love correlations when we have correlation between different risk models. And this will be my quick summary. Before I end this video, this is an AI-driven platform. So all of those risk indicators across thousands of instruments act as the source of risk data that feeds into the LLM of Hedgtrade, the large language model, which means that the end user can ask all kinds of questions. So whether you're a day trader or investor, so here I'm going to say for today, what are the top 5 trades uh, for the next trading session with entries and exits. So this is a quick example as to what is valid, what can be traded going to Friday's session. Obviously, you can inquire as to whether you want to look at US stocks, FX, indices, commodities, metals, really across thousands of instruments. Hedgtrade is going to maintain all of that in real time. So what we have here for today's session going to Friday, we have silver with entries and exit, natural gas, gold. So gold could be a good trade. And what about FX? And what about the top 5 Forex trades for today? So for the FX traders out there, day traders, swing traders, what have you. So you can really ask all kinds of questions. The repository, the Hedgtrade repository, will have it for you. So really, it's all about building the sum of the evidence with different risk models so that you can trade the markets confidently. And the difference with other AI models is that obviously Hedgtrade provides full transparency. Why? Because those risk models are exposed to you. You can navigate the Hedgtrade platform. Everything here is presented into with visual dashboards where you can interact with the underlying data and risk models. So here for today as an example, the Euro USD, you've got your entry, your exit, and what have you. So I'm going to stop here. If you're interested, send us an email. We have 7-day free trials available. Otherwise, for the S&P 500, NASDAQ, and Russell, looks like we're not done yet with the bearish sentiment bottoming out probably sometime in mid-March before having a counter trend. And we'll see now for the rest of the year as we keep looking at the markets. All right, everyone, have a good one.